All right, so next up is the daily report for Monday based on Friday's close. We have no signals in overreaction and channeling. You notice in the volatility how volatility remains quiet and is starting to decline once more. It bounced a little bit, but never got into the normal volatility, and it's now started to decrease again. That is good news for holders of XIV. ADX continues to march up. It's approaching 29, and the bulls are clearly in charge. 10-day max pain candidates: Boeing, Dupont, United Tech, ExxonMobil, and Chevron. We have a handful of good signals in channeling and overreaction for blended commodities: oil, agriculture, utilities, and treasuries. 5DD patterns in the VIX and blended commodities. A triple screen in travelers, a 551W in Brazil, and the auto framer is showing better than 2-to-1 for this whole stack of symbols. So we definitely want to look at DBC oil, agriculture, Brazil, travelers, Dupont, and of course the VIX and XIV. Looking at the Dow tactical summary, we have a handful of dojis. You'll notice a triple screen for travelers, and it comes in at 2.1 on the auto framer. No RSI2 signals fired. I want you to notice that Caterpillar has no patterns firing, but it was a percent winner on Friday based on its return of 1.39%. And when we look over at the NDX, you notice that score of 135. What that means is that Caterpillar, if you had taken the previous 10-day trading range from high to low and taken 35% of that, that's how much higher it closed on Friday. So that tells you that was a really remarkable breakout as United Health. So we'll take a look at Caterpillar, United Health, just on the basis of their strong breakouts. And I also like Visa. Now, Visa is one that we saw in the BMR report as slowly improving its quality, or the ETF2 report, and had a score of 112 on the 10-day NDX and the 1-month NDX. So that's actually pretty good. And it's up 3.35% on the 10-day period, and that's exceptional for the Dow, which is why it's highlighted green. So we want to take a look at Visa for that reason. See if maybe we can catch some of that stealth trade. Same lens, now looking at the ETFs, the ETF 30 here. Again, you can see a handful of channeling and overreactions, and they all test out better than 2-to-1 on the auto framer, so that's good. 5DDs in the VIX, VXX, and in blended commodities, DBC, and they we have a bunch of good RSI2 candidates as well, and they all test out better than 2-to-1 on the auto framer, so a lot to choose from. Just notice how well XIV, we've been on that bandwagon for a while. It's been just outperforming everything and closed at an all-time high here on Friday. So that's nice. Symbols from the auto framer to look at. This has all the computations that you need for framing your trades, and it's based on the My Risk category for the evaluation of risk, and then the reward is based on a return to the 10-day high, assuming a mechanical entry 5 cents above Friday's high. So those are already on our list to look at. The regression line fractal framework, again, we have 4 populations we're looking at here: the Dow 30, the ETF 100, the S&P 100, and the NASDAQ 100. And so a symbol like Boeing, which has a reward to risk ratio of 6.59, what that means is that the 10-period regression line in Boeing is 6.59 ATRs below its long-term fair value, which we describe as the or define as the regression line 270. So it tells you there's 6.5 ATRs just to return to the long-term fair value. 4.5 in Dupont United Tech, 2.5 in Visa, 1.8 in Walmart. On the other end of the spectrum, these that have negative numbers that are in the parentheses, this tells you how many ATRs above the 270 period regression line each of these candidates are. And these are the 5 that are the most advanced on an ATR basis above their own 270 regression line. And these are the relative strength winners: Intel, Cisco, Chevron, Coke, and Johnson & Johnson. So we definitely want to look at those and play continuation of strength, or upon failure, playing them as a return to the 270 regression line and the long-term fair value. So we're going to add Boeing, DuPont, and Walmart to our list. Okay, so we got about a dozen symbols we want to take a look at. So let's just a couple other quick looks through. What I want to highlight on this chart is some longer-term market condition factors here, right? So chart number 5 shows the slope of the 30-period regression line over the last 10 years, the black line being the average, slightly above 0, and then +1 and +2 standard deviations above, and -1 and -2 standard deviations below. You can see just how steeply downward price was showing on the last 3 big sell-offs that we had. This was at 2008, 2009 time frame. So where we are right now is here, just at the +1 standard deviation. So if we zoom in and just look at the last 200 days, but keep the statistical lines in the same area, you can see we've just completed about a nice 30-day, 40-day run right here, where we've gone from just below that 0 line and I have now pulled back inside 1 SD above the long-term average. So this has been a good move, but not an extraordinarily good move in terms of how fast the goodies have come. So we're not overheated yet, is how I interpret that. The last one before we look at charts of interest, we want to look at the z-scores of 3 sets of regression lines now on this chart. And we have the 10-period regression line in light blue, and you can see that we are just at the top of that +1 SD and a series of higher lows. So that's a favorable long-term condition. The red line is the 90-period regression line, and you can see we've come back up to the top of that +1 SD. For a while earlier this year, it had gotten really steep, cooled off, but stayed above that 0 line. So we've never really jeopardized that longer-term trend, and now it's back up near the top of the channel. It's not overheated yet. Starting to get close. And then the 30-period regression line is this black line oscillating, and here it has just rolled over and come back right to the 0, right to the edge of the river. So we're not overheated. There's a nice orderly pullback. I generally like the way how it is shaping up. Things are looking good. You notice down here, price with respect to the river, it's finding support now at the north shore of the river instead of pulling back into the river like it did before, or even testing the bottom of the river like it did before. So things are looking very good for this grinding northward market. All right, so what we want to do now is we're going to shift to some charts of interest. All right, let me get this set up for you. There we go. Okay, so the first thing we'll take a look at is, let's just take a look at XIV while we're here. You can see that it has emerged from the river, from a sideways quiet channel down here with support at 33 and has moved all the way up to almost 48 in the last 4 weeks. That's a 50% move in a market that had been grinding quietly most of that time. It's had 2 pullbacks just like the broader market, but it resolved this second pullback and is now at 47 1/4. And that's right at the edge of the floodplain. So this is a tough place to add to it on a swing basis because it's so far advanced. And so I'm expecting a pullback here one of these moments. But I would expect it to find support somewhere around 45, which is where all this buying pressure, you can see all the buying volume that came in at 45 when it broke above that location. So I'm expecting that now to act as support, which is nice. It's at the bottom of the dragon. It's at the edge of the river. That's what you would expect. So I count this as the oversized gain the last couple bucks. However, that's on a swing basis. On an intraday basis, I am definitely interested in putting turbo on this, as you can see from the daily moves that I'm circling here. It has some nice intraday moves as well. So at the first sign of strength intraday, I'm ready to add turbo to this position. All right, next up we want to look at, let's look at Intel. So Intel was one of those regression line fractal framework candidates. I just wanted to show you again how far above its 270 it has stretched. So this pink line is the 270, and now that's nice. It's gone from being basically flat to upward sloping with strength. That's good. And at the same time, the blue line represents the 10-period regression line. You can see how far ahead it's gotten. And so this is something like 9, if I remember right from our chart, this is like 9 ATRs above its own 270. That's the size of the opportunity and the size of the excursion. And if you just take a note back here, you basically had the 270 and the 10 were co-located. And then, so the interesting moment, and the reason we love this SQC is that when it breaks out here, you can have a stop down in here, at 26 with a breakout at 27, and on a risk of 1, you're looking at almost 5R. So that's pretty nice. So I'm prepared to continue to reward Intel. It's one of the leading RLFFs, so we know in terms of ratios, we know on a normalized basis, it's a real leader, and technology is one of the leading sectors, so you got to be prepared to continue to reinforce. I would definitely use the support levels that can be found here with the parabolic, which lines up nicely with the bottom of the dragon here. So that's the risk level that I would take on this. And really, you have the next support level, 29.75, and then have this nice gap to support. So anything, as long as it stays north of 30 or 29 3/4, we should be safe. And it's continuing to reward that intraday. All right, let's take a look at Cisco, also in the tech sector, and also CSCO. This is earlier in its life cycle here. So what you have is a nice sideways quiet channel had developed, and now we've got the breakout here. You can see the pinch of the Bollinger Band, and this is earlier in its life cycle move. Here was the gap in Cisco, and you notice that the 270 had been sloping down in this sideways quiet period. It was basically flat and has now started to crank up. And the distance from this 270 to the 10 is about 6 ATRs, and it's just starting this next move. So I think you've got to be ready to reward Cisco on continued price action northward. So that's Cisco. Let's take a look at a couple energy sectors. So Chevron. Now this is when you can actually frame for trade here, because we have prices pull. The extreme moment of pull away from the 270 was here, and this had a nice 5-day orderly pullback, and then found support. Found support here at 129. I like this first dot. Start showing you, hey, that if we you got to be ready to get long this thing again about 133.5. If it makes takes out Friday's high, your first target for gains would be 133.5, and then if it gets past there, that's free and clear. And that's this is one of the reasons we like the SQC. Notice this here. You have the SQC starting to pull away from that 270. The difference between the 10 and the 270, you notice getting large. And now you've got the orderly pullback that allows you to frame a trade. All right, let's look at Dupont. Very nice. So we had that sudden sharp downward move. It has failed to fail further. It's now given us 4 days of buying pressure with a nice support at 65 and has started to return to close the gap. And with a long-term target of 69.75 back here, this sell-off that's happened inside this box has barely budged the 270, which was sloping upward, and has now basically gotten flat. So we still have a long-term residual goodness about this. And if we go and look back a little bit, kind of look at a longer context. Now suddenly that pullback is looking a lot more like opportunity than it is, devastation. Because you can see the slope of the 270 has just been uniformly up, and then all of these little pullbacks here down vicinity, the 3 SD Z pattern don't look so. They look more like support levels now and opportunities to buy quality on sale. So now when we zoom back in, that's what it looks like we have here. And the price action of the last 4 days would tend to agree that what we have is this, and a return back to the 270. So that's the size of the opportunity still. I think you have to buy this not later than 67 or price re-entering the river. But that's a low-risk trade. And this is also one where stop and reverse would be indicated, because if it fails here, then that long-term goodness is no longer valid. And then the price on the downside looks like it's down here around 62 and maybe some and 63. Those are the next price levels on the downside. So if this fails, starts coming this way, those are your three price targets here. But otherwise, you know, the long-term fair value of this thing is up here around 69.5, and what you're playing for that trade. So this is a really nice critical state in Dupont. So really nice critical state here. Either way it goes, you have a favorable reward to risk ratio trade. So that's why Dupont should be on your radar. You don't have to guess which way it's going. You just have to be positioned to take advantage of the move when it happens. All right, let's take a look at Coca-Cola, KO. I like Coca-Cola here. We talked about Coca-Cola last week, in fact, and we liked it even more last week because it had just started to emerge from this sideways quiet channel, which took out the previous support level, and now what we got was 5 days in a row of gains. So we still like it. Some of the early money is gone on this move, but what you have is a frameable trade. As we look in close here, this trade frames in both directions. The distance between the 270 and the 10 is something like 6 ATRs. But you have a nice support level here at 41.90 at the edge of the river and the bottom of the dragon. And so you can wait for 42.40 to go long. But if it fails through 41.40, really the next price level is back here to the Bollinger Band mean at 41.20, and then the far side of the river. So this is almost that would be the case of a Z trade going the other way. But again, if you get above 42.40, it's north to Alaska. Okay, let's do one more. Let's take a look at Visa. Yeah, you might be concerned a little that we missed the easier move. Not that any of them are easy. But again, what I want you to notice is that when the regime changes, the first two dots going in the next direction are the early alert that we need to be thinking about getting long. So after a nice support level here at 207 and a play back to 223, which we've talked about last week, there's still room in here for that play, for those $5, especially now that it's cleared that resistance level. That's still very favorable. You can continue to reward this one all the way up to 223, even 225. But then it's got to come up and really get through all of this price action in this 226 to 228, all this resistance. But again, you can see the power of the Z pattern, and then the idea of the regression line fractal framework is highlighted nicely here as well. Again, if you look at the points of extreme divergence from the 270 at this moment, at this moment, at this moment, and at that moment, all of those were saying, look, 223 was the reasonable price level, and it's taken time to get there, and that sort of gives you a steady expectation about upside price performance. So yeah, so a number of good swing trade candidates there to be interested in going forward. So that's all I propose to talk about now. If you have any symbols, I have a few minutes yet. Otherwise, getting ready to start shifting gears to start getting ready for the IITM workshops in July. We're going to do another day trading workshop there in July, and then we're still tentatively planning on something in like the second week in November out here in Kansas City. I still owe everybody a note on that. I'm putting the kids and my wife on a plane for California here tomorrow, so I'll have some bachelor time at home to be able to work on things like flyers and writing and so forth. So I'll get something out this week about November to gauge interest. But if there's no other questions or comments, I'll wish you guys a good evening, and I'll stop recording this and we'll get it posted in the at the YouTube channel in about an hour or so.